The global economy watched with bated breath as China announced its first quarter GDP figures for 2025. The outcome? A defiant roar from the east. China's economy expanded by a robust 5.4%, exceeding expectations and signaling its resilience in the face of adversity. The trade war, initiated by the Trump administration in 2018, had cast a long shadow over the global economy. However, the 5.4% growth figure has challenged this narrative, at least for now. Is this a sign of underlying strength in the Chinese economy, or is it merely a temporary reprieve before the full impact of the tariffs takes hold? The answer, as with most things in economics, is complex and multifaceted. The 5.4% growth figure wasn't a result of chance. A closer look reveals specific sectors that acted as powerful engines, driving China's economy forward despite the trade headwinds. Among these, exports and manufacturing stand out as star performers. Chinese businesses, anticipating a further escalation in the trade war, ramped up production and exports in the first quarter of 2025. Manufacturing, the backbone of China's economic rise, displayed remarkable resilience. Despite rising costs due to tariffs, Chinese factories churned out goods at an impressive pace. The services sector, another crucial component of China's economy, also showed signs of strength. Domestic consumption, while not as robust as in previous years, remained relatively steady, providing a crucial buffer against the external shocks of the trade war. Despite this, the overall picture for the first quarter of 2025 remained positive, with the strong performance of exports and manufacturing offsetting the weakness in real estate. The U.S.-China trade war, a simmering conflict since 2018, reached boiling point in early 2025. The initial salvos, fired by the Trump administration, targeted Chinese goods with a 10% tariff, later escalating to 25% on a wide range of products. China, refusing to back down, responded in kind, imposing retaliatory tariffs on U.S. imports. This tit-for-tat exchange escalated rapidly, with each side raising the stakes, further straining the economic relationship between the world's two largest economies. In April 2025, President Trump announced a 10% baseline tariff on all imports, with additional tariffs targeting specific countries including China. This move sent shockwaves through the global economy, raising fears of a full-blown trade war. China, facing an increasingly hostile trade environment, intensified its efforts to diversify its trading partners. President Xi Jinping embarked on a tour of Southeast Asia, seeking to strengthen ties with key economies in the region. Faced with the onslaught of U.S. tariffs, China responded with a mix of defiance and pragmatism. The Chinese government, while retaliating with tariffs of its own, also implemented a series of measures aimed at cushioning the blow to its economy. One of the key strategies employed by China was fiscal stimulus. The government announced a significant increase in infrastructure spending, injecting billions into projects ranging from high-speed rail to 5G networks. This served a dual purpose, creating jobs and boosting domestic demand, both crucial for counteracting the negative effects of the trade war. The People's Bank of China, PBOC, China's central bank, lowered interest rates and injected liquidity into the financial system, making it easier for businesses to access credit. Recognizing the importance of innovation, China also ramped up its investments in research and development, particularly in sectors like artificial intelligence, robotics, and renewable energy. The goal was clear: to move up the value chain and become a global leader in cutting-edge technologies, reducing its dependence on Western markets and technologies. The trade war, while primarily a bilateral dispute between the U.S. and China, has had ripple effects across the globe. Economies around the world, intricately linked through trade and investment, have felt the tremors of this economic earthquake. From farmers in the American Midwest to factory workers in Southeast Asia, the trade war has left a trail of collateral damage, highlighting the interconnectedness of the global economy. The tariffs imposed by both sides have disrupted global supply chains, leading to higher costs for businesses and consumers alike. Manufacturers reliant on components sourced from both the U.S. and China have faced difficult choices: absorb the higher costs, pass them on to consumers, or relocate their operations. Emerging markets already grappling with their own set of challenges have been particularly vulnerable to the trade war's fallout. Declining demand from both the U.S. and China has hurt exports, while capital flight triggered by risk aversion has put pressure on currencies and financial markets. The International Monetary Fund, or IMF, has warned that the trade war could push some emerging economies into recession, highlighting the fragility of the global economic recovery. While the 5.4% GDP growth figure painted a picture of resilience, the true impact of the trade war on ordinary Chinese citizens is far more nuanced. Behind the aggregate statistics lie individual stories of struggle and adaptation, as businesses and households grapple with the consequences of this economic conflict. For some, the trade war has meant job losses. Factories, particularly those reliant on exports to the U.S., have been forced to scale back production, leading to layoffs. The rising cost of imported goods, a direct consequence of the tariffs, has also squeezed household budgets. From everyday essentials like food and clothing to consumer durables like cars and electronics, Chinese consumers have felt the pinch of rising prices. However, amidst the challenges, there are also stories of resilience and adaptation. Chinese businesses, known for their entrepreneurial spirit, have been exploring new markets, particularly in Southeast Asia and Africa, to offset the decline in exports to the U.S. The 5.4% growth in the first quarter of 2025, while defying expectations, has done little to dispel the uncertainty surrounding China's economic future. The trade war, a constant source of volatility, continues to cast a shadow, making it difficult to predict the trajectory of the world's second-largest economy. Experts remain divided, with some expressing cautious optimism, while others foresee a slowdown in the coming quarters. The International Monetary Fund, in its latest World Economic Outlook, projects China's economy to grow by 4.6% in 2025, a significant slowdown from previous years, but still a respectable figure given the headwinds. The IMF cautions, however, that the trade war remains a key risk to the outlook, with the potential to derail growth if it escalates further. Other institutions like the World Bank and the Asian Development Bank offer similar forecasts, highlighting both the challenges and opportunities facing the Chinese economy. They point to factors such as robust domestic consumption, a burgeoning middle class, and continued investments in infrastructure and technology as potential drivers of growth. How effectively China addresses these challenges will determine its long-term economic trajectory. China's economic journey over the past few decades has been nothing short of remarkable. From a poor agrarian society, it has transformed itself into the world's second-largest economy, a testament to its resilience, adaptability, and strategic vision. The current trade war, while posing significant challenges, also offers valuable lessons about the Chinese economy and its ability to withstand external shocks. One key takeaway is the importance of economic diversification. China's heavy reliance on exports, particularly to the U.S., has made it vulnerable to protectionist measures. The trade war has underscored the need for China to reduce its dependence on a single market and diversify its trading partners. Another lesson is the critical role of innovation. China has made significant strides in technological innovation in recent years, particularly in sectors like artificial intelligence, robotics, and renewable energy. This ability to think strategically and adapt to changing circumstances will be crucial for China to navigate the complexities of the global economy in the years to come. The trade war, far from a mere economic spat, is a symptom of a much larger geopolitical shift, the rise of China and its challenge to the existing global order. The unexpected 5.4% growth figure in the first quarter of 2025, while defying expectations, is but a single data point in this unfolding saga. The true test for China lies in its ability to navigate the challenges ahead, maintain its economic momentum, and carve out a new place for itself on the world stage. The road ahead for China is fraught with challenges. The trade war, if it escalates further, could inflict significant damage on the Chinese economy. Domestic challenges, such as rising debt levels, income inequality, and environmental degradation, also demand attention. The world watches with bated breath as this economic and geopolitical drama unfolds. We are witnessing the birth pangs of a new world order, one in which China will play an increasingly prominent role.